Hey everyone, let's get right into what's moving the markets today. US futures are just a tick in the green this morning, but honestly, everyone's focus is glued to the escalating tensions in the Middle East. Here's what you need to know. Israel and Iran are now 4 days into trading strikes. Civilian casualties are mounting, and the fear is that this could spiral into a broader regional conflict. Iran has already warned that if the US steps in to help Israel, American bases in the Middle East are fair game for missile strikes. That's a chilling threat, especially with over a dozen US military sites scattered across the region. President Trump, for his part, is playing it tough, threatening Iran if they target any US troops, but also floating the idea that a deal between Israel and Iran is possible. The big question on Wall Street: will the US get pulled into this conflict, and what does that mean for markets? Now, shifting gears to the economic data that landed before the Bell housing starts and building permits both came in lower than expected for May. Housing starts plunged 5.5%, hitting their lowest level since 2020. Permits dropped too, down nearly 4%. Those are some serious red flags for the housing sector. On the flip side, initial jobless claims actually beat expectations, falling by 5,000 to 238,000. But look, when you smooth it out over 4 weeks, claims are still at their highest since last fall. And that brings us to the main event, the Fed's rate decision this afternoon. Almost everyone expects rates to hold steady, but the real action will be in what Chairman Powell says at the press conference. Investors are hanging on every word, waiting to see if the Fed still expects 2 rate cuts this year, or if those hopes get pushed out even further. So stay sharp. Today's headlines could ripple across your portfolio fast. I'll catch you after the Fed.